Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. You know, there are over 70 million baby boomers who are currently retired or about to retire. And because of that, it is very important for financial advisors to plan for their clients' transition to retirement. Well, I have on the perfect guest who can help us understand these retirement strategies and the communication and education that is needed as their clients or potential clients transition from employer based retirement plans to wealth clients and what comes along with that. Well, enough from me, so let's go ahead and get started. Today's episode is sponsored by the award winning Zephyr, which helps investment professionals make more informed investment decisions. All right, let's get on to the star of the show. I am very honored and welcome Jania Stout. Jania is the National Retirement Practice Leader at Prime Capital Financial. Jania, thank you so much for coming on the show. It's an honor to have you on and a conversation I'm really excited for. Can you please tell us a little bit more about yourself and Prime Capital Financial?
Sure. Thank you, Ryan. I'm excited to be on this show as well. A little bit about myself. I've been in the retirement plan industry for 30 years. Definitely aging myself there, but I spent kind of the first third of my career on the record keeping side. I started right out of college at ADP, the payroll company, when they were building out their 401k business. Went to Fidelity, which is where most people, if you're selling 401k, that's where you would go to retire because the biggest brand in the industry.
Yeah.
But I wanted to be an advisor. So I did the crazy thing after that and left Fidelity and built a retirement plan team and built it up to about 13 billion in retirement assets. Did that in about 7 or 8 years, and then sold that business to One Digital. And then 3.5 years later, left my team and my clients to join Prime Capital as the president of retirement and wellness. So Prime Capital is a great firm. We have about 40 offices across the country, about 200 advisors, and about 30 billion in assets. So a lot of our advisors do both wealth and retirement plans, which I think is really special and unique and really perfect for this discussion because if you're an advisor that is trying to grow your wealth business, there's no better way to do it than to focus on the retirement plan side as well.
Yeah, you're exactly right, Jania. And this we talked previously. Kind of have a warm spot in my heart for this space because this is really where I got introduced to investment management, wealth management, is working with plan sponsors, educating the plan participants, and investing and why it's so important. And so many people. I just read a statistic, Jania, about um, the retirement crisis in America. And so many people have access to 401ks or whether it's a SEP or some type of employer based retirement plan. But a lot of them don't take access, take advantage of that opportunity. Why is that? Or how can maybe firms or financial advisors help them, the participants, take advantage of those benefits?
Yeah. I think a lot of times, if you look back, the benefit of growing up in this business, I can kind of look back and see how things have changed. And, I think that a lot of people are struggling financially, just making ends meet, budgeting, like paying their rent, having, enough to just survive. And I think that as an industry, and when I say industry, I mean really the financial industry, um, I think in the beginning years, we were so focused on just telling people that they needed to save 10 to 15% of their pay. And we weren't listening to the fact that they needed help just surviving. So, good advisors now, especially plan advisors, have developed and worked with HR companies or HR representatives on, how to budget, how to pay off debt. Like those are becoming like topics that we realize and recognize we have to focus on that first before we can get people to be able to save. So I think, I don't think that it's that people don't want to save. It's just they don't know how. And I think we've come a long way as an industry. Automatic enrollment in 401k plans has helped that. But I can tell you, like, there's still the need for financial advisors to do their job and to engage the workplace because this is actually like a big deal for me is I love auto solutions, but if you think about it, most auto enrollment plans default you to a pre-taxed basis.
Yeah.
And think about how many people out there that should probably be saving Roth versus pre-tax. I mean, that's probably a whole show in itself, but
Yeah.
I definitely think like that's why we can't give up. Like as advisors, we need to get engaged, get our HR teams that hired us to allow us to do the right thing, which is go in, do one-on-one meetings with the employees so that we can help make sure that that they're not stressed out about their money.
Yeah, that's a fantastic point. I so when I started, gosh, aging myself 25 years ago, it would that started the rollout. Number one, it was automatic enrollment, and then two was the Roth 401k, and it was such a great benefit. But you're right. If you do the auto enrollment, do you are you really being educated on the benefits of the Roth portion? And to me, it's all about education. And is there something financial advisors can do to help educate? Does it start at the HR level? Does it, or should they be having participant education? Can you help us with that?
Yeah, I mean, I think from an HR level, usually they're the gatekeepers that
Hmm.
give you the access to talking to the employees, right? So I think it's more around getting them to say, hey, if they've hired you to be their advisor for the plan, hopefully they trust you to
Yeah.
do the right thing with the employees. The challenge that we face around this country really is do we have enough financial advisors to get in front of every working American? And we don't. We really don't statistically. I mean, if everybody, could, we could still move the needle. But I think the first step is getting your clients to be all in with you and to allow you to be introduced to their employees because I think that they really hold the keys to helping you get in front of the employees. Yeah.
You're exactly correct. It's interesting. So it's much more different than just your private wealth client, where that's your direct client. Here, it's kind of like you have layers of clients, correct? You have your HR, your gatekeeper, your uh, the plan sponsor, and then you have the participants. So it's interesting dynamic there. Let's talk about those participants who, are a lot of them are close to retiring. Let's say a financial advisor, they're communicating with them, and let's be real, margins on a 401k, they're pretty narrow, right? So you're probably kind of hoping that eventually these clients, these participants become wealth clients of yours. How do you have any tips there in helping financial advisors make sure that transition is smooth and they can retain those assets?
Yeah. I mean, I think it's just really, throughout my years developing financial wellness programs for our 401k clients, at first I used to think like I needed really slick, cool technology, like a big dashboard and like that had all these really neat things and that employees would log in and do things with. And what I recognized sadly was most individuals don't really have time or desire to do that. So it's just the old fashioned, like getting in front of the employees, whether it's digital, virtual, or in person, it doesn't really matter. Keep your name in front of them, right? Build a relationship.
Okay.
One of the things that we do is we have a session called Retire Well, which is those pre-retirees, helping people with Social Security, Medicare, how to emotionally prepare for retirement, because the emotional side's important too, and then how to build an income kind of plan in retirement. Those types of sessions are where you're going to find your best opportunities. You still need to do the basics like the budgeting and
Yeah.
getting out of debt, because that is important for an HR manager to make sure you're not just going after like supporting the pre-retirees or the retirees, but you've got to build that other piece into your strategy, because those are the people that you're going to be able to help sooner. And I would say it's got to be repetitive, right? So last year, my team brought in about 40 million in wealth assets, just from our Retire Well series. So, like, and some of those attendees, this was like they'd gone to many sessions over the years, right? So you're not going to get it. You're right, Ryan. I think the 401k business is a low margin business, and a lot of advisors, like early in my career I used to wholesale through the big wirehouses and try to convince advisors to go after this business, and some would, and they would be like, oh, that's a lot of work. I don't know if I want to do that, but it can be super rewarding.
Yeah.
And I mean, 40 million came out of the retirement plans, and I know, and it was one of my advisors that, you know, put in the work. And he's a young advisor too. He's only 29 years old. And he just repetitively did this series. And over time, last year, he brought in $41 million. And then I'll tell you another crazy statistic about that. He never met with any of those people in person. That was 100% virtual.
So that's an awesome point. The There's a couple of things I as you're talking, my head is just spinning like all these different things that we could talk about, and one of them too is scalability.
Mm, mm,
Like you have, but then let's say it's just a firm, a 401k that might have 200 participants. How do you like do it at scale? And that's just one client. You could have 10, 15, 20 of these type of clients. How do you do it at scale where you can still reach out, get your name out there in front of all these participants and make sure not only are you touching, like you said, touching on the people that might be retiring here in 5 years, but also the folks that are in their accumulation stage of their journey? Like, how do you do it at scale where you're not just talking to everyone every
right.
day for 5 minutes?
Yeah, I think, well, a couple of ways. And I will say that COVID helped this in the
Okay.
sense that prior to COVID, a lot of our education was done in person, because, like, people really didn't know what Zoom was or didn't feel comfortable with it. We might do phone calls, but there wasn't Zoom or Teams or whatever that, video you use. So when that happened, we changed everything to virtual. And what we found is we got greater engagement.
Okay.
So I think that advisors are a little bit shy about telling their clients that they want to do one-on-ones or group meetings virtually, because they think that their client's going to think they don't want to come out there. But the reality is we get better engagement that way, for a couple of reasons. One, let's talk about doing one-on-one financial coaching. If you do that in a virtual setting, you can have that individual invite their spouse to the meeting.
Okay.
But
Hmm.
if you did it the old fashioned way in the break room at a company, their spouse isn't gonna like come out to the building and meet
Hmm.
up. There's also a little bit of like guilt or shame factor that they shouldn't feel shameful, but like the individuals like don't want to be in the break room because they don't want their peers to think that they need help. So I think like a private setting like virtual really does help provide better success. And you can share screens and do kinds of like a lot better engagement. So that's one way that will help the scalability issue, Ryan. The second thing, and I've been talking about financial wellness for basically my whole career. Like it's been my thing that most people that know me know that I've been talking about this before it became like a big buzzword. But hire somebody to help you do it. Hire someone, pay them a base salary. Like I built my business hiring young grads, encouraging them to get their CFP,
Yeah.
shadowing us, and then they were our educators, right? You know, you don't have to, it's not a high cost uh, position because it's usually somebody earlier in their career, and it might cost you some money, but you're going to make that back. So don't try to be all things to all people. If you're an advisor listening and maybe you already built your book a little, you know, and you don't want to go out there in the trenches and meet with everybody or do all these virtual calls just to talk about budgeting and debt and things like that, then hire somebody to do that part. And then there's all kinds of ways that, you know, if you do a day of one-on-ones, you just take the employees that have signed up for this and you do some research on them and you separate out the ones that you think your more junior advisor should take, and then you take, you know, the folks that are maybe older, bigger balances that might have more complex questions. It's not, you know, you should be, if you're senior, you should be the one talking to them. Let your junior people talk about like basics. So it is very doable to make this scalable. I think over the years, when I get that question, if I'm speaking at a conference or wherever, it's very doable. You might have to hire somebody to do some of the work, um, but like you can't do it all yourself. But use technology. Don't shy away from virtual meetings. They're super. I think they're better than in person any day
Yeah.
for that first meeting, right? Like once you build the relationship, you might want to go out and meet them in person as well. So,
Jania, such fantastic insight there, and that's how really I got started working, you know, at the financial advisory group up in Seattle. They just brought me in, and I was doing more of the analytical, working under the CFA, doing analysis on the mutual funds, but transition to helping these, you know, newer 401k participants and educating them on the importance of investing and building that relationship. And it's such a great way of getting your name in front of so many people and building your practice. I'm kind of surprised more people don't do it, to be honest with you. Um,
yeah. You know, it's interesting, Ryan. We just had 22 interns this summer, and a
wow.
lot of these folks. Well, it wasn't just on my team; it was
Yeah, okay.
all of Prime Capital. That would be a full-time job just if I had them all for.
Internship group.
Yeah. But you know what's interesting about the next gen youth going into this business, like most of them are in, you know, are in college and are finance majors or doing financial planning majors, things like that. They come to Prime Capital as an intern, like thinking wealth management only, and then they get stuck on, like it's a rotational thing, and then they get stuck on my division and they're like, what's this retirement plan stuff, right?
Yeah.
And they're like, no, I want to be a wealth advisor. I'm like, okay, let me teach you guys something, right? Like, do you want a well-stocked pond to fish in? Or do
Yeah.
you want to just go out there and try to find
Cold
business?
call.
Right. Like it's the perfect place to find wealth opportunities. So I agree with you. I'm surprised more people don't do it. It's a big part of what Prime Capital does. Like if you, a lot of the legacy, like the founders of our firm, that's how they built their business.
Yeah.
Scott Colangelo, who's our founder, I mean, that's how he did it. And he manages a lot of money on the wealth side.
Yeah, fantastic. You just have to have patience, right? It's one of those things that over time, if you're in it 5, 10, 15 years, it's going to pay off all that hard work you do at the beginning. Jania, let's position or transition real quick. Private markets. I've had so many conversations about alternatives, private markets, private equity, great conversations. One of those buzz things you talked about it, you mentioned private markets and 401ks. How does that really impact, the advisors that are servicing these 401ks?
Yeah. Well, uh, it's definitely got a lot of buzz, especially because Trump signed, an executive order asking the DOL and the SEC to focus on this. I think that it makes a lot of sense from that everybody should have access to investing in this segment of the market, right?
Yeah.
But then when you get into the 401k world, we have fiduciary duty, and there are, lots of plan sponsors and fiduciary advisors like us that are, we could get sued if we have imprudent investment options in the
Yeah.
401k plan. So we have to provide lots of due diligence around, is it a prudent investment? So with that being said, I do think that we will see an increase of opportunity for private markets inside 401k plans. It won't be, I could be wrong, but it won't be like a standalone option. It's going to be embedded into either a target date fund
Okay.
or I see a lot of opportunity for it to be part of a managed account solution. So if you provide advisor managed accounts, AMA,
Yeah.
um, I mean, that makes a lot of sense for me, that you want to have a professional that's truly knows what the allocation looks like. Otherwise, you could be in for a lot of trouble if you just offer it as a standalone. And there's liquidity issues and things like that. So there's a lot of noise about this. And I've answered a lot of reporters' phone calls on this topic. And I think it's not that it's anything really new. It's the same thing. We're fiduciaries of these plans. Now we'll see the product manufacturers maybe create more opportunity for us to evaluate and consider to put it in a plan. So we'll see what happens. But I do think that it is a good thing for working America to have access. But we're only talking, like a little percentage of their
Yeah.
whole asset allocation. So, but yeah, it's exciting. There's never a dull moment in financial services.
I think that's why we all got into it. One of the reasons, right? Every day is something new. And you brought up a good point. When I heard this starting to roll out, I often thought it would just be another standalone investment option like your large growth, large value fund. And that kind of made me hesitate a little bit. But as a model portfolio or as a you know, separately managed account type vehicle within it, that's a great way of doing it. So then you're getting exposure to it, but you're removing some of that risk that
Exactly.
is that could happen. But also to thinking more about it is you brought up the illiquidity issue with private markets. Well, in a 401k, you're supposed to look long term, right? So maybe there's a good match there that, yeah, we can't touch this money, whether who knows if it's an interval fund or what type of vehicle it's in. But in a 401k, you don't want to touch it anyway. You can't for how many years?
Right. Yeah. Well, and I mean, we have to be able to solve for it because employees do, like, if they leave a company or they go to retire. Like we do have to make it flexible enough, but I do think there are some interesting product manufacturers out there that have like the cash built into it because they're large enough that they might be able to handle any liquidity issues. So, and things get developed every day. So you never know what they'll do to solve for that illiquid issue.
Jania, thank you so much for coming on the show. You shared such great insight. I loved it. I love talking about this subject, all the great tips that you provide financial advisors and the education, which I love and it's so important. Great conversation. It was a real pleasure and honor to have you on. Where can our audience get more information about Prime Capital Financial?
Yeah, absolutely. You can go to our website at primefinancial.com, and my contact information is there as well, but learn all, more about our firm. We're always open to talking to anybody.
Fantastic. Thank you, Jania. And thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other podcasts on the Adjusted for Risk YouTube channel, as well as on Spotify. Be sure to like and follow those channels, as well as on our Zephyr LinkedIn page. Thank you very much, and have a great rest of your week.